I want to introduce a new indicator that is very accurate. You're going to learn 2 trading strategies based on this indicator that are very profitable. Just make sure you watch this video until the end and let's get started. But before we start, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, to add this amazing indicator to our chart, here we click on indicators and we search directional imbalance index, this one, which is a new indicator from BigBeluga. Alright, this is the indicator, and as you can see, it's added here below the chart. It may seem a little strange for you, but don't worry, I will explain it now and teach you 2 trading strategies that are very accurate. This indicator is designed to track the strength of the market by counting how often the price is making new highs or new lows over a defined look-back period. Each new high adds a bullish count and each new lows adds a bearish count. These are bullish counts and these are bearish counts, and these calculations are reflected here below the chart in the form of this cumulative oscillator that you see here. The balance between the bullish counts and the bearish counts can show which side has dominance, or it can help us to know when there is imbalance between forces of buyers and sellers. Here on the right side of the chart, for the current condition of the market, it also shows the percentage of dominance. For example, here you can see that we have approximately 62% dominance for the bears, suggesting that the current condition of the market is bearish. As I mentioned earlier, here we have a cumulative oscillator for bullish pressure and bearish pressure separately. The blue line is related to bearish pressure and the orange line is related to bullish pressure. When one of them is rising, the other one is falling, exactly showing how the balance of power between buyers and sellers is changing in the market. As you know, there are only 2 participants in the market, buyers and sellers. When one of them is becoming more powerful and becoming dominant in the market, the other one is actually losing control. And this oscillator is exactly showing this. When the blue line, which is related to sellers or bearish pressure in the market, when it is rising, on the other hand, the orange line, which is related to bullish pressure, it is falling. So here we know that sellers are dominant and we have more bearish pressure in the market, and this means that the price is declining in a downtrend. On the other hand, when the orange line, which is related to bullish pressure in the market, when it is rising, the blue line on the other hand is falling, and this shows that buyers are dominant and we have more bullish pressure in the market. So the price is advancing in an uptrend. So basically, based on what we see in this indicator, we can say that the crossovers of these 2 lines can be the starting point of a new trend, because for example, from the point that the orange line goes above the blue line, this shows that we have greater bullish pressure in the market, and this can be the starting point of an uptrend. Or on the other hand, when the blue line goes above the orange line, this can be the starting point of a downtrend. From this point that the blue line goes above the orange line, which actually shows the dominance of the sellers, the area between the lines becomes blue, and from the point that the orange line goes above the blue line, which actually shows the dominance of the buyers, the area between them becomes orange. So the coloring of this area can help you quickly and easily discover who is dominant in the market. But please pay attention that we don't trade only based on these crossover signals. If we want to take them as a reversal signal or starting point of a new trend, we need other confirming signals that probably a reversal is forming on the chart. One of the trading strategies that I want to explain is a reversal strategy, and we're going to use these crossover signals as a confirmation of reversal. We're going to add another indicator that also shows reversal signal in the market. And the other trading strategy that I want to explain is a trend following strategy. We use this indicator for trend identification, and then by the help of another indicator, we find buy sell signals inside the identified trends. Before Before I start explaining the strategies, I'm proud to announce that recently I published a book, The Art of Price Action Trading, which is a complete guide to price action analysis. The link is in the description and you can get it later if you want to master price action trading. Alright, let's begin with the first trading strategy, which is a reversal strategy. As I explained earlier, the crossovers of the orange line and the blue line can be a signal for a reversal and starting of a new trend, but we need more confirmation for taking higher probability signals, because if you trade only based on these crossover signals, you can encounter many false signals. So here we click on indicators and we search RSI, this one, and we're going to use RSI with default settings. In this trading strategy, we're going to use RSI divergence for knowing when there is a probability for reversal. For example, here, following this uptrend, you can see that the price made same level, but here RSI didn't follow, and you can see that it made a lower high. This shows that we have increased downside momentum, and this is called bearish divergence, and it gives the probability that maybe a reversal is going to happen. This is just a probability, and we can have this situation also in the pullbacks. So for further confirmation of the reversal, we use this indicator. You can see that after we got reversal signal from RSI, here in this indicator, at this point, the blue line crossed above the orange line, and this shows that the balance of power is changing in the favor of the bears. So here, when this blue line is closed above the orange line, we can say with higher probability that a reversal is forming on the chart. So in practice, we could enter a short position at this point with the stop loss above the high of the divergence pattern, above this high that we have here, and you can see that after that the price turned to a downtrend, and we could have a very profitable trade where the price declined down to this point. Alright, here at the end of the downtrend, you can see that the price made lower low, but RSI made higher low. This shows that we have increased upside momentum. This is called bullish divergence, and this gives the probability for reversal. But as I said, this can also happen in the pullbacks. So we need more confirmation, and we're going to use this indicator. You can see that after the divergence, here the orange line crossed above the blue line, showing imbalance and dominance of buyers. When the orange line is closed above the blue line, now we can say with higher probability that the price is turning to an uptrend. So here the buy signal is confirmed, and in practice we could enter a long position at this point with the stop loss below the previous swing low, below the low of the divergence pattern, which is here, and you can see that after that the price turned to an uptrend, creating a very profitable position where the price advanced up to this point. By the help of this method, you can easily catch high probability reversal signals in the market. For example, here again, you can see that the price made same level, but RSI made lower high. And then here in this indicator, you can see that the blue line crossed above the orange line at this point. So the trend reversal is confirmed, and you can see how the price turned down after that. Please pay attention that this trading strategy doesn't give you guaranteed signals, and you can encounter false signals. So risk management is very important to run this trading strategy successfully and profitably. 1% role risk management is the best risk management strategy that you can use. I have a complete guide on this. The link is in the description, and make sure you watch it later. Alright, now let me teach you a trend following strategy based on this indicator. Here we click on indicators and we search stochastic, this one, which is a built-in indicator on TradingView, and we need to change its settings. So here we go to the settings of the stochastic oscillator, and here for K% length we set it at 7, and here for K% smoothing we set it at 3. Alright, we're done with the settings of the stochastic oscillator, and now let me teach you how you can trade based on this setup. As I said, when the blue line is above the orange line and the color of the indicator becomes blue, we can say that the market is in a downtrend and we should look for short position opportunities. opportunities. For finding short position opportunities in this situation, we wait for the K% line, the blue line, to go above 80. This shows overbought in a downtrend, so giving the probability of downside turning of the price. In the next step, we wait for the K% line, the blue line, to go below the D% line, the orange line. When the K% line is closed below the D% line, the sell signal is confirmed, and in practice, we could enter a short position at this point with the stop loss above the orange line and profit target at 1.5 risk to reward ratio. After this trade, you can see that we had another opportunity for opening a short position. You can see that the K% line went above 80 and then it closed back below the D% line here at this point. So the sell signal is confirmed, and in practice we could enter a short position at this point with the stop loss above the orange line and profit target at 1.5 risk to reward ratio. And here you can see that there is another opportunity where the K% line went above 80 and then it crossed back below the D% line at this point. So in practice we could enter a short position at this point with the stop loss above the orange line and profit target at 1.5 risk to reward ratio. On the other hand, when the orange line is above the blue line and the area is orange, we can say that the market is in an uptrend and we should look for long position opportunities. In this situation, we wait for the K% line to go below 20, and this condition shows oversold in an uptrend, and so giving the probability of upside turning of the price. In the next step, we wait for the K% line, the blue line, to go above the D% line, the orange line. Please pay attention that we enter a trade when the blue line is back above 20. For example, here, we shouldn't take any action, but here, when the candle is closed, the blue line is already above 20. So the buy signal here is confirmed, and in practice, we could enter a long position at this point with the stop loss below the blue line and profit target at 1.5 risk to reward ratio. There was another long position opportunity here where the blue line went below 20, and then you can see that it crossed back above the D% line here at this point, and it is already above 20. So the buy signal is confirmed, and in practice we could enter a long position at this point with the stop loss below the blue line and profit target at 1.5 risk to reward ratio. And we continue like this. Please pay attention that although this trading strategy is very accurate and we are entering at low risk positions inside identified trends, but this doesn't mean you will not encounter false signals. No, there is no trading strategy with 100% win rate. Losing positions are always part of the game, and you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.